the most prominent economists in India to form the Citizens Monetary Policy Committee, who got together to come up with their own monetary policy. And there is a clear consensus among the members. The RBI should stay put and on rates and focus on liquidity transmission instead.
Insofar as I am concerned, I frankly don't think growth needs any real help, particularly at this point in time, from the monetary policy side. And as far as inflation is concerned, although I think because of the reports on the monsoon, there are expectations that the price pressures would be muted. Nevertheless, you know, there's still some time to go before the effects of the monsoon are really felt. And in the interim, in the short run, there can be price pressures which we may have to be a little wary about.
Okay, Dr. Sen, I'll come to you once again to also assess the international scenario, which has quite a few ambushes on the way. But let me get to the other members. Samiran, how do you assess the macroeconomic situation in the country, especially the inflation scenario? Do you see the RBI's estimate of 4.9 to 5% by January 2017 being at risk?
In our view, the positive news on inflation front is that, one, the monsoon forecast has been normal. In fact, the second positive news is that the MSP increase, even for this year, has been pretty benign. So both these factors, as well as the general deflationary process that has been continuing on the food inflation front for a while now, should make sure that food inflation over the summer stays relatively benign, and that's what gives us some kind of a comfort that RBI should be able to meet its January 2017 inflation target. In fact, could be a tad below that. However, of late, some of the upside risks have shown up. One of them is that global commodity prices are up about 10–15% from their April lows. In particular, sugar is up almost 30%. The other risk that we are seeing is that core inflation is very persistent, and on top of it, the GDP data is showing a huge divergence between consumption growth and investment growth, which could become inflationary at some point of time. And we obviously still don't know when the 7th Pay Commission impact is going to come, and there are some base effect related distortions around July-August. So keeping all this in mind, the tone of RBI would be very interesting, that whether they are seeing upside risks to their inflation forecasts. At this moment, we think the risks are pretty much balanced, and that's why we want to see how inflation progresses for the next 2–3 months, particularly on the food inflation front, and then take a call after that.
Okay. Well, that's interesting. I'll come back to you for the domestic liquidity assessment as well. But Sajid, you know, taking off from what Samiran is saying, he says the risks are balanced. But clearly, we have seen food inflation, you know, go higher. I'm not terribly worried about the global commodity prices just yet, but correct me. Anyway, they didn't get passed on so much. Would you worry that 4.95% in Jan is at risk? Do you see that RBI's fan chart getting shifted upward at all?
I think it's a bit premature to say the fan chart itself will shift to this policy, but I think any downside risk that existed back in February, March, April have kind of disappeared right now. Remember, the RBI's forecast for oil in this year is $40. At 50, we're already, you know, 20%, 25% above that forecast, and the RBI itself estimates for every $10 increase above the forecast, you're looking at a 20–30 basis point increase in headline CPI. So I think for starters, oil prices have moved up beyond what the RBI thought they would. Secondly, they had forecasted inflation to be around 5%, they said, with interquarter variations. April was at 5.4. We suspect May is going to be close to 5.4. June could be 5.5. So at least in the first quarter of the fiscal year, you could be 40–50 basis points above what the RBI had thought it would. All this does is raise the bar for what the monsoon has to do. Now, let's be clear here, there's no direct, easy correlation between normal and strong monsoons and food prices. But, you know, starting conditions matter. You're coming off 2 successive droughts. So there'll be various factors at play. What needs to happen is food prices need to, or food inflation needs to go down later in the year to offset any increase from oil or commodities and ensure that we're at the 5% mark. So I'd conclude by saying the margin for error that the RBI thought perhaps existed 2-3 months ago with commodities, oil at 30, has clearly evaporated. It's going to be much closer than we thought, which means the space for any easing down the road, if any existed, is much more limited at this point in time. And therefore, I continue to believe the focus this year will be much more on...
And like we told you, the verdict is unanimous in the Citizens Monetary Policy Committee, with all the 5 members, including the chairman Pranab Sen, believing that the RBI should maintain status quo on the rate front tomorrow.